Mary, really good to be speaking to you. Mary's the CEO of one of the largest banks in Africa, and there is so much to talk about. We'll talk about some of the domestic evolution of the economy within South Africa. A big election happened this year. But first, I just want to start with a question about the state of the global economy, because one of the themes that has come up throughout the course of this morning is that it's been quite the ride in terms of policy uncertainty, tariffs, geopolitical realignment. I mean, all of this has been emanating from the U.S. And there are economies, especially emerging market economies, that are especially exposed, especially when you have the U.S. pull back on things like USAID funding. So let me just ask you, from your standpoint right now, at this point in time, how do you see the winds coming through from the global economy when you think about the outlook for 2026?
Thank you, Joumanna. I guess we started the year, I remember the mood at the World Economic Forum in Davos being very positive, with a positive outlook, expecting global GDP growth of about 3.3% for this year and next year. And this year, as we sit now, I think they've been revised downwards since then. I think the level of uncertainty across the world is probably at its highest. I mean, it's much higher than any of the other crises that we've lived through, the pandemic, with people just really not knowing what is the economic framework that we are working with. Global fracturing and supply chain fragmentation is happening constantly. So I guess there's a big rebalancing that's happening. I don't think we go back to the levels that we've seen, and I think the kind of global order that we've operated in. So there's a lot of adaptation. I mean, our clients, when we've engaged with them, particularly on tariffs, I think you could see there's a lot of thought on resilience and how do they continue without, with a loss of being able to export to a big market like the US. And people are innovative. I think that's always a thing when you're faced with so many changes, is that you forget that people adapt, businesses adapt, and so forth. So, yeah, I guess the trade, the uncertainty on trade has really weighed heavily, even on the South African economy. I think we've had to revise our growth outlook. And as I said, that I think we have seen inflation, the promise last year we thought, inflation's coming down. Inflation is ticking up globally, which makes it difficult for policymakers, because in an environment like this is when they want to support the economies. But many of the governments that across the world sit with high levels of debt anyway. So, the capacity to be able to respond and support the economies during this time, it's limited. So, yeah, in this operating environment, what we've seen is that I guess there are some companies that are able to be resilient and pivot away, and some companies that have conducted their business in a way that they've exported to different markets. Yeah. But, ultimately, there are those ones that are dependent on making sure, where there was dependency, that it's not a change they can make right away.
South Africa specifically has been a target of President Trump. Political, domestic policies, have become part of the discussion. Ongoing trade discussions taking place now between South African representatives as delegate, speaking with the U.S. about the reduction of tariffs. But, it is a time of tension between South Africa and the world's largest economy. As an industry leader in South Africa, how has this complicated matters for you, and how would you like the tension with the United States to be resolved?
Yes, South Africa and the U.S. have got very deep, strong historical ties. Okay, so, that's, we consume even the culture, apart from just having it as an export market. So there are really a lot of linkages between South Africa and the U.S., and there are about 600 companies that operate in South Africa that are U.S.-based, and South African companies that also operate in the U.S. So obviously we would like to see the relationship make less headlines for the reasons that they have. I think President Ramaphosa has probably done well to articulate and provide some clarity on issues that when we live in South Africa, there is definitely no way that there's any basis to some of the narratives. But clearly there's a recalibration. And I guess what matters to us really is actually the trade aspect. So South Africa is at the moment, I think we're paying about 30% on exports from South Africa. We have not retaliated, and there are discussions that are underway that we are optimistic that they're going to get to a landing.
How do you think the expiry of AGOA, which is the trade accord that allowed for tariff-free South African and other African exports to make their way into the U.S., that expired yesterday. What sort of an impact do you think that's going to have on small businesses?
On small businesses, it is quite significant, because I think if you're exporting wine, and I think the U.S. has been your main market, those kind of reconfigurations take quite a bit of time. Our clients that operate in sectors where they export and they've been beneficiaries of AGOA are already making plans, but there's no doubt that it's going to have an impact on jobs. It's going to have an impact on just those companies' ability to grow, and more so the countries on the continent. I think South African countries now reading the leaves for the last couple of months. They are not betting on AGOA being renewed. It would be great if it's actually renewed, but I think that they are making alternative plans. But across the continent, some markets are, they don't have the kind of resources to be able to diversify away. So again, hopefully that's one that it goes through Congress and it's again supported. But I think there's also quite a high likelihood that that's not the one where South Africa is able to be successful. If you look at Botswana, Lesotho, some of our neighboring regions, their tariffs are lower and South Africa is higher. So we cannot discount the fact that, there's a political tension there that might get in the way. Yeah.
That being said, we're talking about all of these global macro headwinds. If you look at, when you posted your earnings a couple of weeks ago, my colleague Jennifer Zabazadja spoke to you around the earnings. Pretty solid earnings growth, north of 13%. Where is that growth coming from in an environment where there's so many global macro uncertainties?
Yeah, so I guess GDP growth in South Africa has really been lackluster for quite a number of years. And largely because, the economy has been hamstrung by state-owned entities that have a monopoly on transport, energy, that have not been functioning for a very long time. So one of the things that give us hope, and I think we're able to be constructive with the outlook, is the economic reforms that are taking place in the country. So on energy, I think Eskom has done well to stabilize the days of load shedding, and then the energy factor and reliability factor keeps on improving. So that's a positive outlook. There are more reforms that still need to take place. But, as business, we are encouraged that government at last is tackling some of these structural impediments to growth. So in the medium term, we're quite constructive about that. And again, on the transport and logistics side, that's also improving. There's momentum. Recently, about 11 private sector companies have been awarded a contract to be able to operate on some of the Transnet lines. So that's a big shift in South Africa that I think in the last, it's overdue, probably should have been done about 20 years ago. But those are things that are important to support the medium and long-term growth prospects of the country. So that's encouraging. And currently, as FirstRand, as a group, we've always said, South Africa is our primary market. We'll have operations outside to make sure that they provide resilience and growth for the portfolio. So it was quite pleasing to be able to grow earnings in South Africa about 13% in an environment where GDP growth is less than 1%. So so I guess the growth comes from corporates and small businesses. So we are seeing the trickle down effects of the economic reforms that are taking place. Households are still under pressure. Like the rest of the world, we've seen a high inflationary environment with high interest rates. So that has put pressure on households. But even then, that inflation is starting to come down. Rates have come down. They would probably have come down further, but the Reserve Bank would like to lower the inflation target to be at the bottom end of the range.
Yeah.
And so that will be about 3%. In the long run, that's very good for South Africa because poor households, inflation is probably the thing that eats most into their wealth. And also, I suppose, from a lending capacity point of view, that's going to be helpful. And most importantly, for government debt.
Yeah.
So we have this transition. We've got the structural economic reforms and then the monetary reforms that are taking place that all of that are supportive of environment that should have better growth prospects for the banking sector and a lot of other businesses operating in SA.
So I do want to bring it back to that reform momentum. Are you pleased with the pace of the reforms that are currently being looked at in South Africa, or would you like to see a pickup in momentum?
We would always advocate for better. We would always advocate for a faster pace. But, you know, I have an appreciation of how complex that is. You basically have to start with an entity like Transnet that operates the transport and the train networks, which is not working. It should have tackled some of the reforms a long time ago. And then during the time when there are performances like this, that's when you're going through with the reform. So it's complex. And I do think government working in partnership with the private sector is actually making the right moves. We put a lot of pressure on them and they respond. But I would say at the moment, yeah, things are probably moving as well as they could under the circumstances, because it requires capacity actually to be able to undertake reforms, which is why a lot of governments don't end up doing it. But yeah, I mean, I think it's encouraging, let me say that in short.
Okay. I think people in the room would be surprised to hear that the South African rand is at the strongest level in the past 12 months. The Johannesburg Stock Exchange is, I believe, at record highs. So we talk again, you know, about some of the structural issues holding back the South African economy, some of the global macro headwinds, but the capital markets are telling a different story. Why do you think that's the case, and how do you see the outlook from here?
So I think as one talks about the global levels of uncertainty, I think this is one of those moments when, as South Africa, rich with the commodities that we have, I think we've been a beneficiary of that. So prices of gold and the platinum group metals have gone up. So all of that has been very supportive in an environment of global uncertainty. Interest rates coming down were good for the banking sector as well. So that easing in monetary policy conditions. And so, yeah, I think the JSE this year hit new levels, as you said. And even from July, when they got to 100,000 level, the index it's already at about 108, about 20% return in dollar terms. So that is quite significant. Off a low base, because I think the last couple of years, investors, particularly foreign investors, have sat outside looking for the trends to turn around. So I think some are encouraged about that. The Anglo transaction that happened resulted in quite a lot of outflows.
Yeah, that came out yesterday.
So yeah, so when you look at that, you have to remember that, okay, but that's a big transaction that's taken place. But it is encouraging that the JSE is coming back again. I think the big aspect that the two driving factors that I think are quite important is that political risk has subsided with the government of national unity, as fragile as it is. The second aspect of what's supporting the JSE at the moment, because it's definitely not a growth outlook, because that still lacks luster. I think it is the fact that these structural economic reforms are going to take place, so the people are believing aspects of that story, that it's different to the one told before. And then the last one, I think, that you see in financial markets being reflected is the fact that inflation targeting, there's trust in the South African central bank that, you know, inflation expectations will be lowered. So I think from about May, we've seen a reduction of about 70 basis points in the yield curve. I mean, this is where other governments' yield curves are going the opposite direction. And so, yeah, so there's belief in the economic reforms that are going to take place, and then obviously just supported by the commodity
Sounds like you really do believe it was right for the SARBs, the South African Reserve Bank, to change the way they think about their inflation target. There was support from the business community for that.
Yeah, I think there is support because if you actually look at our peers around the world, you know, you can see our inflation target is a bit outdated. 3 to 6%. People have moved to like a single point on that. And then I think, you know, they've been targeting 4.5% for a while. That's the sub. And lowering it to the bottom end of their range, it does sound prudent, particularly where we are with inflation. Because if they were doing it when inflation was high, I think the resistance would be, they'd be met with more resistance than at the moment. And then another part that actually is supportive is that China has excess supply. So we've seen in the South African market, if you look at the new cars that are sold, the top 10 of that list is cars from China. So those come at a cheaper price point. In the long term, it's a problem for South Africa's manufacturing capacity, but in the short term,
goods inflation,
it's actually reducing the inflation in the market. So if we can at least capture that and reduce our long-term debt, our long-term cost of debt, that will be a positive outcome, because we do have opportunities with the oil price and, I suppose, cheaper imports. It's an opportunity for South Africa.
Well, to round up, let's look ahead. South Africa is hosting the G20 this year. You are co-chair of the Trade and Investment Task Force for the B20. What are some of the themes that you're going to be exploring this year?
So as the private sector of B20, particularly the work stream on trade and investments, we have not shied away to bring back the topic on the table that, we do need to operate globally in an environment where there are lower trade barriers. Trade is particularly very important for growing economies in Africa. I mean, the level of trade into Africa is low. So again, promoting some of the objectives of the Africa Continental Free Trade Agreement is key. Advocating for world organizations like the World Trade Organization, I think, to be supported, because smaller countries have got absolutely no chance in this environment where, the big countries have their own trade arrangements and they are not at the table. So I think we have not shied away, given the U.S. stance on South Africa's involvement. I think we have stayed true to really what we believe can unlock the potential, particularly for Africa and globally. And we've continued with the themes that started in India and Brazil as part of the G20, and we think that's important.
And maybe just to go back to the beginning, which is, again, a lot of the policy uncertainty stemming from the Trump administration's tariff policy. Do you think that this creates an opportunity for South Africa, for African nations, to rethink who their trading partners are?
I think that's already started happening, actually, for quite a number of years. I think that it's quite important to have a diverse range of export countries, and South Africa has actually been nurturing that. So America remains a very important market, as I started at the beginning, that it goes beyond trade. A big level of FDI in South Africa has come from the US and culturally as well. So it's important, actually, that we are good neighbors with everybody in the world.
Mary, that's a nice place to leave it. Thank you so much, everybody. Thank you.
Yeah.